Very simple. Now, one of the things you want to combine when trading, of course, you've marked out the trend of the market. You've marked out the zone you want to pick your entry. Another way to be sure whether that zone you were correct or not, you could use this Fibonacci tool, Fibonacci retracement tool, right? It's just like for the confirmation. Remember, I told you at the beginning of the class, you see, as far as trading is concerned, there is no guarantee. What you're only looking for is what we call high probabilities, things that increases your odd. So you've marked out zone. Fibonacci is just another tool to help you further reconfirm, right? And let's write this down before we now do the practical. Let's write this down. Fibonacci retracement tool. Fibonacci retracement tool is a trend. Is a trend trading tool, comma, is a trend trading tool, comma, that lets you know.
So it's a trend what?
Trading tool, trend trading, as in you use it to trade a trending market. Trend trading tool that enables you to join a trend after a pullback. That enables you to join a trend or the impulsive move after a pullback. Full stop. After a pullback. Full stop. After a pullback. Full stop. Have you written that down?
Yeah.
Notes. Remember, once I say notes is important. Notes. Notes. You only drag out the Fibonacci retracement tool when the market starts pulling back. When the market starts pulling back. And not when the market is still making its impulsive or trending move. Full stop. Are we there? Let me know if I should proceed.
Yes, Coach D.
Okay. Now, another thing to note, the 61.8, Fib level, Fib, that's short for Fibonacci, Fib level. The 61.8 Fib level is always considered a strong zone to join the impulsive move. To join an impulsive move.
Coach D, please, could you come again? You said the 61.8 Fib level is always considered what?
A strong zone.
Okay.
To join the impulsive move or to join the trend after a pullback. Are we there? Let me know if I should proceed.
You can go. You can go ahead if Anne is ready.
Okay.
Are you done,
And
my darling?
okay, you're done, right? Now
Yes, I
the
am.
next thing, we're still on that, but now right. But sometimes the 50 fib level, that's the 50% fib level, might not be a bad idea to also join the trade. First up. Are we there?
Yes, please.
Okay. Another thing to note, notes. The market will always react. Notes. The market will always react even around the 38.2 fib level. Even around the 38.2 fib level, or any other fib level at that, or any other fib level at that. First stop. But notes, we still continue, but notes, the deeper the pullback, the better the trend. The better the trend. First stop. I've written that down.
Yes, please.
Yes,
Now,
coach.
the most important notes, write these notes, Gadagba. Notes. Once you have a pullback to the 100% level, then you have a complete reversal and no longer a pullback. Once you have a pullback down to the 100% fib level, then what you have is a reversal and no longer just a pullback.
Once you have a pullback to the 100 level,
Yes, 100% level, then what you have is now a reversal, no longer a pullback.
it's not a reversal.
Yes. I mean, that's like a trend reversal and not a pullback any longer. First up. Are we together?
Yes, coach.
Okay, first up. What do I mean? Let's see. Okay, let me explain everything you've just written. What's the first thing you wrote? Now, What's the first thing you wrote? Under the notes. That's what I'm asking. What's the first thing?
So the thing is, we have a lot of notes.
The very first note, the very first point, I said no.
Okay, the very first note is you only drag out the Fibonacci retracement tool when the market starts pulling back and not when the market is making the impulsive or trendy move.
Okay, great. Now, what do I mean? We're on an uptrend. I want to draw a sample of an uptrend, right? Let's say the market has been buying. Now, this first move you're seeing is heading up. You're seeing my screen, right?
Yes, Coach D.
Okay, good. Now, of course, on your chart, it's not just going to look like this. It's going to be a series of candles, buy candles, buy candles. Now, it's still going up. Probably moved away from a support area. So what it means is, if it's moving away from a support area up, what it means is buyers are pushing the prices up. At this point, I wouldn't drag out a fib, no. But let's say it gets to a resistance zone. Now, of course, resistance zones are probably where the buyers are going to come in, sellers are going to come in, is it not? Meaning it's likely a pullback starts from that resistance zone. So the moment I see a sell candle close, after I got to the resistance zone, the first sell candle must close. It's not enough that the candle opened. Probably you're on a 1 hour time frame. And this is still 3:37, meaning the last 1 hour must have opened at 3 o'clock. Is it not? Now that candle that opened at 3 o'clock, we are still at 3:37. It has not closed. So even if you saw red, there is no guarantee that it's going to close as a red candle, right? It can still change until that 1 hour is complete because you're on a 1 hour time frame. So that's for me to say, oh, I'm going to drag out my fib. That candle must close by 4. If it open at 3, 1 hour time frame, remember. So until it closes around that 4 p.m., I can't say, oh, that market already sold. But let's say it's sold by 4 p.m., it closed as a sell candle. In fact, personally, as a rule, I like to see at least 2 candles. Then I drag out my fib, not just one. Are we together? So if I now see 2 sell candles, the first one makes a sell, the second one also closes. At that point, I know, okay, this market has started pulling back. Now, when it has now started pulling back, let's say it has just done, this is 2 candles move right here. I can now drag out my Fibonacci tool and say, yes, I want to know where this pullback will stop so that I can join the move up again. In other words, I'm only using this Fibonacci in a trending market when it has started pulling back so that I can know that, oh, where will this pullback stop so that I can join this trend move and continue with the buy since we are on a uptrend. Do you understand that part? Ladies and gentlemen, if you understand that part, put a 1 on the chat box.
Yeah,
What I
cool.
just explained, put a 1 on the chat box. So what it means is you are not going to drag out your Fibonacci if the market is not pulling back. Even if you're analyzing the market on a 4-hour time frame, what it means is when it gets to resistance and a candle comes out, you know you're on a 4-hour time frame. So what it means is it must have taken 4 different 1 hour candles for your 4-hour candle to close. Until that candle closes, there is nothing like it's pulling back if you're on the 4-hour time frame, right? That's how it is. So when it closes, you can now drag out your fib and say, oh, okay, this market has been pulling back. Let me know where to stop, right? That is what I meant by the first point. Now, what was the second thing I said?
Okay.
What's the second point?
The second note is that the 61.8 fib level is always considered a strong zone to join the impulsive move after a pullback. But sometimes the 50 fib level might not be a bad idea to also join the trend.
Okay, good. Now, imagine you have a rubber band, right? Imagine you have a rubber band. You know, the deeper you drag that rubber band, you know, some of you when you were small, you used to be very wicked. So you're playing with your friend and then you just do that rubber band, you don't drag it too much back. And the person will like, please, please, when you hit that person without dragging the rubber band too much, what do you think happened? The person really does not feel the pain, and that rubber band will not go far. But when you pull that rubber band very, very strong, pull it backwards, what happens? When you take a leap and it goes faster. Now, the same thing with pullbacks. Liking pullbacks to like a rubber band move. The shorter it is, then your trend is not really a strong one. But the deeper the pullback, the deeper your trend will go when it makes an impulsive move. So that's why I would say now, on the Fibonacci retracement tool, it's just like a tool. Remember, I said we just drag it down. Of course, I'll show us. Now, those tools have been numbered. The common one, of course, you have the 0% at the top. That's the very first one. 0 means where the move started from. So nothing to show forth about that. Then the very next is going to be 23. Now, these things, you don't need to stress yourself about cramming them, because each time you drag it out, you always see the numbers. They've been derived mathematically. So even if you don't like mathematics, no problem. Don't try to bother yourself about, oh, how did they arrive at this calculation? No. It's just like statistics, right? There is a formula they use in deriving this, especially if you did average, and all of those statistics and all of that. But that is not your own interest. Now, what you want to focus on is, okay, each of these zones or each of these numbers on the Fibonacci level, we have the 50%, we have the 38.2, we have the 61.8. 61.8. Now, that 61.8% is the one I was telling you that, oh, is the strongest one. If you get a pullback to the 61.8, and probably that zone happens to be, let's say you were in an uptrend. Pay attention, stay with me, guys. Let's say you were in an uptrend, right? And of course, the market got to resistance zone and started selling, meaning it started doing a pullback. If it gets to a 61.8 area, and then you now see something like a doji closing around, meaning after that long sell, it got to that zone where you have 61.8, and a doji suddenly forms. What that tells me was that sell trend has lost strength, and so a doji appear. Or I suddenly see an engulfing candle in the direction of buy. Remember, I said in an uptrend. After selling for a long time, a buy candle suddenly comes out of the 61.8 area. Immediately that candle closes, I will jump in the buy, right? That is what we try to say, oh, 61.8 is better for entry. But you see, sometimes the market might not get to 61.8. It could be somewhere in between 50 and 61.8. We are still saying it's not bad. Most times when you go on your charts, if you measure the number of pips between the 61.8 and 50, you'll discover it's not even more than either 20 pips difference or 30. So you might still be able to join the move just in case it doesn't give you 61.8. But personally, I always like to enter around 61.8. But we're now saying anytime the market comes down to 100%, in fact, the 100% is always far from the rest of them. 100% zone. What we mean is, okay, this sell is no longer a pullback. It's now turning into, it's carrying, when they say it's carrying me to where I don't know, it's now a reversal. It's like if it came back to the beginning of the whole move. This buy started from here. So instead of pulling back here or pulling back here, going back up or going back up, it now came back to the very beginning. What does that mean? The buyers have been swallowed. So that trend has completely reversed. All right. So that was what I said. So I think this explanation, I explained like 2-3 points together. That 61.8 is best. I also said the trends each time. In fact, every of those zones you see that are marked by numbers are actually zones. But remember, I always tell you that there's some zones are very obvious when you open your chart. Those very obvious zones most often are actually 61.8 zones. And you still find 50%. But you see all those smaller zones that sometimes you see them in between, you're not too sure. Those ones can be around this 23 and 38. Will the market react when it gets there? Yes. But it's like saying they are not strong zones, so they can easily be broken. It's like the market is still coming to 61.8, so it has to break 38, break 23, break 38 to get to 61.8. So in other words, these zones are not strong zones as compared to this or the 50% level. Do you understand before we now go and track our fib? Do you understand, ladies and
Yeah.
gentlemen?
Yes.
Okay, good. So who wants to go? You're gonna do okay, write this in your note also. Notes. So you don't forget. Notes. In a downtrend. Notes. In a downtrend. You drag your feet from the top to the bottom. From the top of the sell move, last sell move. Sorry, you drag your feet from the top of the last sell move. From the top of the last sell move. So the lowest points where the candles started pulling back. 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 Full stop. Are we there?
Yes, Coach D.
Okay. Now, while in an we did for downtrend now, right? While in an uptrend, you drag your feet from the beginning of the last buy move, where that buy started from. Remember, uptrend, you want the market to go up. So you drag it from the bottom to the top. From the bottom to the top, where the sell pullback started from. Where the sell pullback started from. Full stop. Full stop. Note, the wicks of the candles are to be taken into consideration, meaning you put them on top of the wick too.
The wicks of the candles
are to be taken into consideration. Full stop. Are we all there?
Yes.
Okay. Come in. So I'm going to make you co-host. But before I do that, I'm going to share. Okay, so how do we make use of this Fibonacci tool? Let me see. Let me know when you start seeing my screen. Are we together?
Yes, we have seen it already.
Okay, good. Now, how do you use the fib to? Let's see. I'm gonna look for. So now, once you're on the chart this way, first of all, what do you think is happening here? Uptrend or downtrend?
Uptrend.
And do you agree with that?
Yeah, presently, yeah.
Presently, okay. Now, let me go on H4. Now, with what you're seeing on H4, what move do you think this market is doing presently? Impulsive move or pullback?
Impulsive.
And tell me. Oops,
It's a
sorry.
pullback.
Okay, good.
Please, why are people saying this pullback? Make I check myself well. I can't see your
Now,
screen.
we said it was an uptrend, yes or no, on daily.
Yeah, but I can't see the screen. Okay, you're back.
Yeah. Now, we agreed it was an uptrend on daily, yes or no?
Yeah.
So, meaning an uptrend, the impulsive move should be the buy, yes or no?
Yes.
So now we
Yes,
came on
coach.
it, but we now saw that the market is selling. Is it doing
Yes.
the major move or a pullback?
It's doing a pullback.
Why? Why did you say
Because,
that?
because presently it's selling.
Good. So now we are all on the same page. Now, assuming I wanted to use a fib tool, right? Because we're on an uptrend, I want to know where to join the buy. Remember, who agrees with me? In an uptrend, you're looking to buy, is it not?
Mm-hmm.
And
That's
presently
true.
it's selling. So what I would have done was I would have brought out my fib. Although there is something wrong with this particular trend, I'll
Mm-hmm.
teach you later. But leave this, but let's go with as if we want to learn this move, right? If I wanted to draw out my fib, I would simply tap my screen. The same place you always pick your horizontal line and the rest of them. Once you tap, you'll see the plus icon. Then you scroll, you see all those horizontal line. You see Fibonacci retracements. Note, there are two Fibonacci there. Hope you can see. Time zones. No. The very first retracement, that's the one you want to pick because you want to know where that retracement is going to stop. So you tap on it. Now, I've tapped on it, meaning I've already picked it. Because I'm in an uptrend, I'll start from the beginning of this last buy move. Now, notice how I place it on the wick of this sell. Can you see there was a wick on the sell just before that buy candle?
Yes, coach.
So I told you that I would drag from it. Now, why we have that wick on the sell is simple. Buyers. Because it was the buyers that pushed the prices up. That was why the sell candle closed up. So I'm taking into consideration that the buyers started from the lowest point of the wick. So you put it on the wick. It must touch. With Fibonacci, what is done here is calculation. Those numbers were right. So you too, when you place, you have to place it meticulously. You can't go and place something like this and think, oh, I placed. Can you see it's not balanced? Oh, I place it here and like, oh, it's almost there. No, it's almost there will cost you. You have to place it precisely on the wicks to be accurate. So once you do that, then the dots, there's a dot at the edge of this Fibonacci. You tap it, the dots would go away. Now, notice that where's the market right now? It's just a little bit below the 38 point something level. Can you see? They were numbers. Everything has been numbered, right? So it's like saying this zero was where this pullback started from, because of course there was a wick on top of that blue candle. So sellers came in here, it's already started pulling back all the way from here. And now it has passed the 23 point something level. And I told you that if you want to join the buy, the best zone is where? 61.8. Right? But sometimes, because you might not get 61.8, if I get anything in between the two, that's why we call it a zone. Anything in between the 50 and the 61.8 line, you can see the line. They wrote 61.8 below, but there is a tiny blue line right on top of 61.8. That line is where you have the entry. So whatever price is there, that's where you enter. So Now look at, I placed it on 50. 50 is around 144.1, right? And this one is around 143.8. That's like 30 pips difference. So in case you don't want to enter, if you enter in between the two of them, it's like risking 15 pips. Still not far from the entry. I don't know if you get what I meant. Are we still together, or am I the only one here?
Coach D,
Yes,
when you
Coach
say it's
D,
not
but
far
please,
from
could
the
you?
entry,
Yeah.
you mean it's not far from the entry from 50 or from 61.8? Which of them?
The best is 61.8, but sometimes the market might not get to 61.8. It will just be very close to 61.8, meaning it's to pass 50 a little bit, right? And could wick somewhere around there. You know, it's close to 61.8. Where I put this line, 143.903.
Yeah.
Can you see an horizontal line I put at 143.906?
Mhm.
Good. Now, you know, that line is almost touching 61.8, but it's also between 50 and 61.8. Yes or no?
Yeah, but it's a bit closer to 61.8.
Good. So you can enter that way. Why am I saying that? Because sometimes most people will go and set pending orders down to join a train. Now, if you set it precisely here, the broker might not activate it if it's a pending order. I always give it a little bit of buffer, giving some points. That's why I wanted to fall in between. Then I join the move. If the market gives me a signal to buy, remember I'm waiting to buy here because we're on an uptrend. So when the market comes there, how the candle close? If I now see a doji or an engulfing buy candle closing around there, I would take it seriously, especially when that candle closes above the 61.8, not below it. If it closes above 61.8, I would go in for my buy or to continue that move. In this case, we're on an uptrend. Do you understand?
Yeah.
Let me recap that. That here was somehow. I'm waiting to buy. It's selling and doing a pullback, but I want to join the buy. I would have marked out a zone, of course, before now. Yes or no? I would have
Yes.
marked out where is the support zone. Where is it? So by the time I mark out the support zone, that my support zone, if I now go and drag Fibonacci, and Fibonacci now falls in the same zone, it gives me a higher probability that yes, I'm correct. Do you get?
Yep.
So that's the work of Fib. It's just to confirm. But in this case, what I drag, I won't drag that. Do you know why? Do you know why?
What did you say? What's the question, Coach D?
I said, you know, I told you at the beginning that this particular example is somehow.
Yes.
Remember. So I wouldn't use this because I know some of you like to trade. So I can imagine somebody going to set an entry at this. It will most likely break this particular one. And I'll tell you why. Because on daily, look at how yesterday daily close. Now, the last buy move, let me remove that Fib. You can see the last buy move started from where? I can say the last buy move started from here. Or I could say here. I'm on daily now, guys. Daily.
Okay.
Now, remember I told you that when you want to pull out the Fib, let a retracement candle close. Yes or no?
Yeah.
Meaning it has to start retracing good. So let's say the last buy that took off, that went all the way up, started from 138.666 area. That line. Now, of course, yesterday's candle now closed as a red candle, indicating that most likely a pullback is occurring. Remember, I told you I want two candles to close, right? To be sure that we've really started the pullback. Because if this blue that you're seeing, this last one, closes above, we are still on the impulsive move. It's just a short, small red that came out, just like you have here. Oh, sorry. I want to pick an arrow. I want to point out what I'm talking about. You know, yeah, so in here there was a red move, a red candle, but the buy move was still continuing. Hope you know. So that was just one off. But in this case now, I'm seeing this. To be sure that we've really started the impulsive move. If this candle also close inside this zone back, you know, there was a zone here, there is a resistance here. If it closes back inside this zone as a red candle, I will drag out my feet. And because we're on an uptrend, I would drag it like this from the bottom of the buy move, the last buy move, to the highest week of that move that shows sellers were in place. Because what is causing this week right now, on top of this last blue candles, is sellers pushing the candles down, right? If you don't believe it, remember I told you, anytime you see week on a bigger time frame, just go to the lower time frame. If I go to H4, can you see now? That week is actually the result of this red candles you're seeing on H4. Do you understand? So I go back now to daily. Do you understand that week and the opposite move happening? Tell me, have I lost you guys?
I'm
Hey,
with you, coach.
we are cuckoo here, paying attention.
So I'm just saying when you see a week on a bigger time frame, that's because the market is already doing the opposite on the next time frame when you go there. So when I drag this down on daily, as long as this current candle closes with a red today, so because I'm on a daily time frame, this 61.8, where it falls to is where it's best to join the buy. Now I will now look to my left. That's 61.8. Is it a support? Remember, I want to buy at support in an uptrend or a resistance that became support. Who remembers? You want to buy at the support or a resistance that became support? Who remembers?
Yeah.
Yeah, we
So
do.
now that I've put a line at 61.8, in the past, I now see, oh, it was a resistance that became support because the market did what? Broke out of it here. It was a resistance, but this long candle broke out of it and it has not done a major retest. So it's possible the market might still come back into this zone. But because we don't mark out a zone with a line, I'll now do this. Of course, I would have marked the week also on top. Now, can you see where the week was in the past? It's also fell where? On 50%. Are you seeing it, ladies and gentlemen? Can you
Mm-hmm.
see the week that was here was actually around the 50%? So that's why I said sometimes you might not get 61.8 precisely. But if this candle pushes back into this same 50% or 61.8, both are still zones. And if you look at it, 142.1, okay, because we're on a daily, this is huge. But if we were on H4, I'm sure it will not be more than 30 pips. But yeah, you're having like 80 pips difference. But of course, when you go to the profit you're trying to make, I'm sure you to be over 200 or 300 pips in profits, right? Because if you join this move back here, if you join this move back here, right, you want to buy. What it means is because you're following the daily time frame, you would have bought from 142 areas or 142, probably in the middle of both 142.5 up till 143. That's already 5. That's like 100 pips. Of course, 144.5 around there, 200 pips, 145 over 145. That's about 300 pips move. I don't know if you understand. So that's why I said the best place to join is 61.8. That zone is always a very strong zone. And if you now draw out, let's say I've marked it out this way. If I now go and draw my trend line, and that place also touches a trend line, oh, ladies and gentlemen, I would be waiting there to buy with full confidence. All I need when the market comes in there is just to give me my buy signal, which is the price action I'm looking to trade. So probably because I trade engulfing pattern, and now say an engulfing candle that closes above that my 61.8 zone, I would, once the candle close, I will buy, and my stop loss, of course, will be below that zone, right? So if it was, sorry, I'll share my screen again, the time now. Or I see a bullish pin bar around that zone when it closes there, because I'm able to further confirm with Fibonacci, I would buy because the bullish pin bar tells me to buy. Or I see things like a doji close, probably okay after the doji, I might want to wait for the next candle to close again to see if it's going in my direction. I would buy. Or there are other patterns too. They call them the tweezer bottom. That one, probably you see a red candle, then a blue candle that swallows that red candle immediately or closes about 70% of that red candle, telling you buyers are now there, buy candle. I would still buy also because everything still came into that zone. So the essence of this Fibonacci is just to enable you know where to join your trend after the pullback. Ladies and gentlemen, is it making sense? Is it making sense?
Yeah.
Okay, so that's how you use the Fibonacci. Not hard, very simple too. Now let's go again. Let me give another example. Oh, good. I think I love this move. Perfect.
Coach D,
Yes.
please, I have a question. Probably when you're done explaining.
Yes, when I'm done.
All right.
Now another one here. You know why I'm dragging on the daily time frame? Because when you check your trend, you're also checking on the daily. Hope you know. Everybody starts here from the daily. So you want to be able to tell that when this thing is pulling back. Because if you go and do it on H4, yes, the market is going to respect that zone at H4. But because it's still not that zone on daily, it might still break and be respecting the daily. What do I mean? Let me explain what I mean. You see, look at this USD JPY, right? The market has been buying for a long period, like for a long period of days. Yes or no? The last buy move started from here. So because this is an uptrend, remember, you only drag it in an uptrend when the sell has started, meaning the market has started pulling back. So this was where the last buy move started from. I drag it to the top to see where it's possible this market is going to pull back onto. Now, because I'm waiting to buy or sell around 61.8, right? Can you see? Right on 61.8. Can you see that in the past, that's 61.8? That line I put around 139.4. Can you see that there was a zone there? Yes or no?
Yes, coach.
Good. So that was like a previous resistance that became support. Now the market broke out of it and has not come for a major retest back. So most likely this sell that is going to come in is going to come into that zone and continue again, right? So I will wait there. But this is what the market will do. When it gets to 38.2, it will react. Can you see there was a time this week of the red candle got to 38.2? Who can say it? There was a week that touched 38.2, meaning this market already sold to this 38.2 before. Yes or no?
Yes.
And are we here?
Yeah, I just got back. I went out.
Good.
The network took me
Anytime
out.
this market gets to each of those, remember I told you to always react, especially this 38.2 is also a major one. So you can see when he got to 38.2, that would have been TP1 if anybody was selling. And you know, once it hits CP1, it will go back again, then continue. So, but now again, it has hit this 38.2, push back up, but it's still going to continue because now we're not there. But if somebody was on H1, right? If you were, that's why I don't check trend on H1, you would have seen this reaction as a buy. The person said, oh, he's no longer selling. The person jumps in a buy only for him to jump in a buy again. And then what happens? This buy is being pushed down again because he was checking a smaller time frame. Meanwhile, this market is still not heading all the way down to 61.8. So anybody who had jumped in this buy here, of course, by now would also be in a loss. If you probably entered around there or here after seeing the market buy. That's why it's better you stay on a big time frame so you know the overall direction. After it gets to 38 point, it reacts, but it's still going to continue down. It's going to get to 50, right? And gets to 61. But like I said, sometimes it might not hit 61.8 on the dot. It could react around 50 or in between the two. But a pullback to 50% is like saying this rubber band pulled into half of the move. So it's not bad for an entry, right? 50% or best bet 61.8. So if you don't want to wait on 61.8 precisely, you can wait very close. I always move it a little bit away from it. That's what I do. Even if I want to take my take profits, I move it a little bit away from it in case it does not hit it precisely on the earth. Are we together? So just if you want to be sure, just mark out that zone and see, okay, is there a zone around there in the past? That way you further know whether you are correct or not. Let me give you an instance of when it happened in the past and see whether the market, even though it bought all the way up, did it still come back to 61.8? Now let me focus on this buy move. Now look at the buy move that's there from here. You know, this buy move got all the way to this zone. It got to this 139 line before coming back, ladies and gentlemen. Now, can you see when it sold? Can you see that it sold back into 61.8? Who can see it? 61.8.
Yes,
Can you
coach.
see it? Good.
Yes,
It
yes.
came back there. Now, when it came back, of course, it would have deceived a lot of people. When it started going boom, boom, some people would have jumped in the buy. Of course, you have opportunity to pull back and all. But it did some small pullbacks in the past. But it has not done a major to 61.8. Now, anytime the market has not retested 61.8, I'm very skeptical about joining the move because it can suddenly do a reversal. Let's say someone saw this now. You saw this buy move, you missed. Oh, it now pull back small. You join the move. See, it did small pullbacks. But because those small pullbacks were not the real pullback, it has not gotten to the major pullback. What happened? At some point, this uptrend on H4 would have been broken with this long red candle. But the essence of that long red candle was actually to come and retest the 61.8. So if it was me, I would have set a penny order at 61.8. Now see how the candles reacted around 61.8. This line, can you see? A sell candle came into it. This week must have been a sell, but buyers pushed it up. As long as the candle closed above your 61.8 line, you're good to go. Did you hear that part? As long as your pullback that came into that 61.8 closed above the zone, you're good to go. If it closed below it, it's risky. Can you see this blue candle closed above 61.8? So at this point, if I was waiting to trade this, let me show you what my entry signal would have been on the close of this candle. Sorry, I'm trying to put the blue candle. The moment this blue candle closed, I would have entered. I'm sure Temi would have said, oh, it's not an engulfing pattern. You know, I told you there are various patterns you see in the market. Some are just stronger than the other. So this, we call it tweezer bottom. But even I told you it's not the name you're after. See, you just what's this market telling you? Sellers came in here, but of course, buyers came in with full force, such that the sellers pushed the market this low, but buyers pushed it back all the way up and almost swallowed the opening price of this. And you can see if you had entered on the close of this candle, of course, below the zone would just be your stop loss. So what did the market do? The next candle is sold. It sold up all the way here. You would have exited TP1. But even if you didn't exit and you still came back here, it has not gotten to your stop loss. What happened again? See, now this is a candle pattern you might probably have been waiting for. Can you see this candle pattern?
Yes, coach.
Good. So that was another buy trigger. So let's say you were not sure of this pattern. This was another opportunity. You would have entered this buy. And of course, this came again to show you, see, we are still continuing on. And what did the market do right after that? Bought all the way up. Imagine taking a trade from 131.6. Remember, this is a JPY pair, 131.6. And then you bought up till at least the zone because you don't know whether it's going to break it yet. But at least this was the highest high it got to before pulling back. So even if you bought back to that height, 131 to what zone? Let me calculate how many pips that would have given you. 139, 131 to 139. Wow, over 900 pips. Following because you were trading, following it for days, right? Of course, this is on a daily time frame. So it's have taken a number of days, but there's nothing as good as knowing where the market is headed. So you can follow it. I don't know if you get what I mean. Because you would have known that you were starting an impulsive move. That was when you joined. So if you're joining an impulsive move, you're going to catch more pips, definitely. And imagine if you exited there and between this 139, you still went all the way to 144 or 145, another 500 pips move. Plenty money, just trading alongside the trend, simply using that 61.8 as your area. Now, somebody that is waiting for this kind of 61.8 is not going to trade every day, is it not? Because you would have waited days. But the point is, these days would have been worth it because in total, this move gave over 1,000 pips. So even if you like use 0.01, the least, this person have made $100. If you had used 0.02, $200. If you had used 0.10, $1,000, right? You get 0.20, $2,000 simply because it followed the trend and then waited for perfect, a better entry, lower entry. Unlike somebody that got in probably around here, when it was doing this small pullback, if you got in, this person would have lost. It would have hit his stop loss, and he would lose more compared to what he was running to gain. Are we together, ladies and gentlemen?
Very well, coach.
So in an uptrend, remember, you drag it from the beginning of the buy move to the last height where the sell started from, meaning where the pullback. But if we're in a downtrend, the opposite is what you do. Let me look for an example of a downtrend. K Euro USD. Good. Perfect. Now let me show you this Euro USD. I'm sure on H4, some people like, oh, this thing is buying. On H4, is it not? It broke out of the trend on H4, like a buy. But then that buy that broke out on H4 could be a pullback. That's why I always like to start from daily. Can you see daily? We are still within the trend. Are we in a downtrend or not on daily? Yes or no?
Yes.
And what about you?
Yeah.
Okay, good. So what it means is the buy was most likely a pullback until it breaks and closes above the trend. In fact, if you were watching this market a few hours ago, this last candle with the week was actually bodied blue candles. I'm like, oh, it has broken, it has broken. I always tell them, wait, this is a daily timer. Wait for today to end. Let's see if this candle will still close outside or inside the trend. But if I was selling because we're on a downtrend and I've been waiting to join the sell move, remember the places I want to join the sell move is where one around the trend line, Abby, or a previous resistance, a support that became resistance, which this particular zone is, in the sense that number one, this zone I marked out here is close to the trend line where I'm supposed to sell, and it was also a support that became resistance. Do you agree with me? Yes or no?
Yes.
Do you agree that this was the support that became resistance? Look at it now. Buy candles were there in the past until this long red candle broke it. So it became resistant. Now, when it broke, remember, we're always waiting for a test. And the market had really not gotten there to retest before until now. Before it got here, but not so close. Until whatever pushed it here today, it came here. So let's say I've been waiting there and I wanted to be sure that that zone was a good zone. I would have dragged out my Fibonacci. Now, in this case, we're on a downtrend. So I start from the beginning of the sell. Remember, I thought the weeks are also part. So I put it on the highest week, yeah, which is where the sellers came in. I put it on the lowest week. Ladies and gentlemen, where is 61.8? Can you see that the candles got to 61.8 and closed below? If I had been waiting to sell at 61.8, what happened? I would have been in profits because I'll most likely have entered the sell around that 101690 area or even 1016. Let's say I move a little bit away from it. Now, what's the market doing? Going below that zone. Are we together? So this would have further confirmed myself if I was waiting to sell that, okay, this place was around the trend line where we were supposed to sell. Two, it was a support that became resistance where you sell at resistance. And then I now tracked down my fib. And I now saw that my fib is still around the sell zone based on my analysis. It gives me further or triple confirmation. That's the work of fib. Do we understand, ladies and gentlemen? So if somebody had gone on H4 to analyze this Euro USD, on H4, it would have been deceived like, oh, this thing is going to buy. It broke out of the trend. Meanwhile, it's still just going to pull back. Then suddenly, this thing might decide to close back right inside this your H4 trend because really on daily, it did not break. Do you understand? That's why I start from daily. Because H4 would have given you the impression that we are on an uptrend. Meanwhile, that was just a pullback. Do we understand?
Yes,
Everywhere
coach.
is quiet. Are you sure you understand well? It's simple. This is the rule. Summary. Let me do a recap of the rule.
You've
Number
actually
one.
answered the question I wanted to ask.
Okay, good. So let me just do a recap. Number one, identify the trend first. You don't use the Fibonacci tool in a ranging market. No, it has to be a trending market. Remember, I told you it's a trend trading tool. So number one, identify the trend. If it's an uptrend, wait until sell starts happening before you drag out your fib. If it's an uptrend and you are still seeing buy candles, you don't bring out your fib because the buy is already going. You wanted to join the buy when it starts selling, or you want to join the next impulsive move. That's why you're dragging out the fib. If it's a downtrend, it's simple. As the market start buying, meaning as the market start pulling back, once the market has started pulling back, meaning you see 1-2 candles close, drag out your fib. Start from the height of the last sell. So where the last pullback started from, that's a buy. Drag it wherever 61.8 falls and 50, mark that zone out. Wait to join the trend where a candle tells you buy or sell. Simple. Chicken. So now we're gonna practice dragging it. All right. So Temi, go first.
All right.
Have I stopped sharing my screen?
Yes,
Okay. I think I made you co-host already. So
I think so. Yeah. Can you see my screen now, coach?
yes.
Okay. Okay.
So let's say you're going to, of course, you can't use the same thing I used. Go to another page.
You said what?
Don't use the same pair I use. Go to another pair.
Oh, did you use Euro USD?
Yes, now.
I thought you used USD JPY.
After you use the JP, I used another one for a downtrend now.
Okay, let me go to
Okay.
GBP USD.
Leave me there.
All right.
So
So
first things first, what are you identifying first? The trend.
the
Is
trend,
it
we
not?
are on a downtrend
Okay, so
on
now,
daily.
before you drag it out, you now ask
Okay.
yourself, since you're on the downtrend, is the market doing a buy pullback? So are you seeing buy candles? Yes or no?
Yes, yes, yes.
Good. So now you can drag. Now you're
Okay.
gonna drag on the last sell move. Where the last sell move broke out from is where you're
Okay.
gonna drag.
Let me
So
zoom in a little so I can
first
see.
put an horizontal line where you, yeah, good. You zoom in, you see the last sell move broke out of a
Okay.
flow or resistance.
Okay. So
Have you picked the fib?
yes, I've done that.
So you just tap on the screen or where you want to start from. That's where you go and tap and drag down. Because
Okay, you
it's
know
a
what? Let
sell, you're
me.
dragging from the top to the down. Just drag down, down, drag it down. Good. Keep dragging, no worry. Good. So once you put it there, as long as that dot is still showing, you've not keyed it though. You have to key it. Is that where the last cell started
I've done
from?
that.
Says, are you sure? Are you on daily?
Yes, I'm on daily.
Okay.
I think I didn't drag it well.
No, the
Let me.
dragging is okay.
Okay.
It's just that cell move, you went higher. There was another cell
Okay,
that started
here.
lower. There was another zone that you did not mark out. That's why.
Here.
No, good.
Okay, I see. Okay, let me drag it again, please.
No,
Pardon me.
no. Okay, no. Wait, I think you might actually be correct. Bring it to that lower one first. I want to see something.
Okay, let me delete this and um, sorry.
Don't worry, just drag.
Okay.
I'll tell you how to adjust.
Okay.
Good. Now, what you want to do, you want to shift that up to where I said, right? Now, go
I think
and
I
drag
have
that
two
up.
now. I'm trying to delete one. I think I have two already.
Okay, just tap
I'm
on
trying
it.
to delete one.
Press it down. Press the particular one down. You want to do it.
Okay.
Good. Now, this one, I want to test run something. And I think in both ways will be correct, though. Now, wait. Where you have 61.8 on the screen.
Yes, coach.
Leave it like this. Now, go and mark out that 50 and what does it tell you? What does are you seeing a zone there? That's what I asked the other time.
Yes. Hold on. Let me
You can shift the line now. There is one line on the screen. Just shift it there.
But today, so she shouldn't
Wait.
adjust the.
Wait, we are still gonna adjust. Don't worry. There's something myself I want to
yes,
test
there
run.
is a zone in the past.
61.8, my sister.
Okay, 61.8. Okay.
Okay. Can you see that there was a zone even in that 61.8? Look to your
Yes.
left on the
Yes,
past.
I've seen it. Yes.
See that when the candle broke out, though it retested it with a wick of that cell I wanted you to come to. Hope you know that.
Yeah.
Hold on.
Now,
Yeah.
okay, I already got what I was saying. So there is every probability that this zone is going to get tested twice. Now look at the one on top of you where you have 100%. You know, there was a time that zone was tested twice.
Yes, yes.
When you have 100%, so good. Now there's another possibility that this 61.8 area too and that 50 are also going to get tested twice. If you look at the zone before it also at the top, before your 100, that one too was tested twice.
Yeah, that's
Yes.
true.
So good. This because you're on a daily time frame. So there's most of the probability that this buy you are seeing is just going to retest this 61.8 or 50 and come back. Now,
Okay.
anytime you are not sure, you know this scenario now. We have two scenarios where there was another. You know, I told you there was a cell below where we are supposed to start from.
Yes,
you know.
yes. Yes, where we have that week.
Yes, good. This is what I'm do. I do. Anytime I'm not sure, I put a pending order at that upper one. This one where you are now, 1.194 area.
Yeah,
Put the sell limit there and I'll risk my 30%. But this other one, if I was to drag from this other one, now go and drag on this other one. This is what I'll do to be more sure which one. Drag this your fib down. This same fib, don't use another one.
Okay.
That's up where you have that dot, just drag it down. Tap on it as long as that dot is showing. Remove those horizontal lines, they'll confuse you. Keep dragging it down. Good. Put it there. Good. Perfect. Now, where is this market right now?
Right now is around 61.8.
Good. Is at 61.8. So let's say you were not sure. Now put an horizontal line. Key this thing there. Key it here.
Okay.
Now put an horizontal line at this 61.8 now to see the zone. Good. Until this candle that is there, this daily candle, if it closes above this 61.8, my sister, I'll know that this my zone is a no-no.
Yeah.
Are we together? Remember,
Yes,
I told
coach.
you the candle did not close above it, and probably now close with a wick, and I'll go on H4, and I'll see probably an engulfing sell candle or whatever sell signal. I will jump in the sell because looking to my left, it was also a swing point. That was a support that became resistance. Do you understand? So
Yes.
until this daily candle closes, I cannot tell. I won't jump in on the sell. Some people make this and jump in because we are at 61.8 right now. No, I want to see how that candle is going to close. If that candle closes above that zone, you can see this time around 100% is not far from it.
Yeah.
So if it closes above it, I'll just wait for the market to come back to the same 170 line and I'll join the sell and sell it down to 100%.
Okay, that's if we have a candle pattern for confirmation, right?
If it closes above closed above means it's not obeying your rule to sell.
Okay,
It's still
above.
to
Okay.
buy.
Oh, sorry. I thought you said below. I thought I heard
No,
below.
no, no. No, if
All
it
right.
closes above it, what it means is it broke out of that zone, right?
Yeah.
So where
Yes.
is the next zone after that zone? Is the zone you have at 100%. Remember, I told you all those numbers are actually zones.
Yeah.
It's just that some zones are stronger. So anything that makes it close above 170.23 area, the next zone is whatever price you have around that 100%. So put a line at 100%. Let me see something. Put a line. Good. 190. Let's say 188. That's all right. Like 180 pips. Hope you know. 170 to 188. That's like 180 pips. Is it not?
Yeah.
So imagine it now closes above it. I'll just wait for the market to come back. That's like a break and retest. I'll wait for it to retest this 170 line and I'll sell up to that 188 area. Sorry, I'll now buy up to that 188 because it closed above. Remember, we're in a downtrend. So if it wants to sell, it should close below so that we can sell. Is it not? But if it closes above, it's going the opposite way. So I will now buy, and of course, that's a good reward risk ratio. Imagine I'm entering at 170, 170 for a buy if it closes above, and probably my stop loss is like 30 pips below that zone. Maybe my stop loss is around 167, and I'm now going to catch 180 pips. I'm risking 30 to go and catch 180. Good returns. Is it not? Six times your investment. That's how you trade. So always wait for, no matter what you feel, wait for the market to tell you where it's going. That's how I always tell you. The last thing is still the candle. So whether you drag fib or not, you still want the candle to decide how it wants to close. I hope you understand now.
Yes, yes. Taken.
So that's how to trade this fib. And any
Okay.
question?
So okay.
Hold on, I'll take your question. And
Is she still here?
Very
Probably
much.
I can talk again. Okay.
very much. So hope you understood what we're doing. So most times,
Yeah.
for your fib to be valid, right? That candle must respect that 61.8. The moment it does not respect that 61.8, let's say if you're on a downtrend, meaning it should close below it. If you're on an uptrend, meaning it should close above it, right? If it's doing the opposite, just know anytime a candle close above my 61.8, I will enter. That's meaning I am below. Let's say I'm on an uptrend, it closes below. I will enter the opposite trade instantly when it comes back to that same zone. Yes. In this case now, if it closes above it, I wanted to sell. If it closes above it, once it closes above, I'll just wait for a retest of that same 61.8 zone. Once it retests there, I'll join the buy straight to 100%.
But at the close of that candle.
Yes. This candle must close now for you to make a decision. Any candle, even if you're on H4, the candle must close before you make a decision with the candle. Remember that.
Yeah.
Because this candle that is looking big now is a daily candle, meaning until this night, you can't tell how it's going to close. What if it closes with a week? So even on H4, that candle has to close for you to make a decision with it. So anytime it closes below above 61, it will help you. Yeah.
Sorry. Okay, please. My question is this, sometimes even let's say, okay, we've been waiting to sell, at 61.8, and the market, it will always do what it wants to do. So let's say it closes above 61.8 and we feel that, okay, this market might start buying, but we are actually waiting for a retest of that zone, right? But sometimes, can it happen that even that candle, that reverse candle that we are waiting for, closes back below, or around that 61.8 zone?
If it now closes under its back, yes, it happens now. Market can do that. You're waiting for it to retest so that it will continue up, right?
Yeah.
And it now closes back below. That's why you have a stop loss below the zone, so that once it closes back inside that zone below again, it's like saying, I'm no more going. I'm doing a reversal. So to reach your stop loss in that case. But what would you have been risking is little because you came and entered around the entry.
Okay. All right. Thank you very much.
Welcome. Now, for a retest, once I see this close on daily, let's say it close above this, invalidating our sell, I will now go on H4 so that I can see the retest when it's happening. Do you hear me?
Yeah.
If not, if you go and wait on daily tomorrow again, you've seen it close. You're now opening a daily candle. You won't know because inside a daily candle, there is 1 hour, there is H4 that are already buying and selling inside it. I don't know
Yeah.
if you get what I mean. Like this
Yes.
large candle you're seeing now, it's looking as if everything that has happened today is just buy, right?
Yeah.
This candle. But you know that today, if you go on H1, H4, you will see that even though we had more buy, there were also red candles that sold. But if you don't
Yeah.
go on a
I've
smaller time
changed
frame,
to H4.
good. If you don't go on a smaller time frame, you won't see those red candles or buy candles. That's why I always tell you when you want to enter. If I go on H1, you see more red.
Yeah, I'm on H1 now.
Good. So anytime you want to pick your entries, go on lower time frame so that you won't miss the retest. Like inside this move now, you have seen where it pull back, moved, pull back, move. But on that
Yeah.
daily candle, all of that you won't see it at a glance. Is why we
True.
always go on lower time frame for
Okay.
entries. So do we
All
understand?
right. Yes, yes.
Okay.
So
Any
can I answer
question?
now?
Yeah, and I want Anne to drag.
Okay.
How many more minutes? We've exceeded our time.
Yeah.
Let's just give us 5 more
We are
minutes.
spending almost 2
I'm trying
hours
to save
now.
my battery and also for the next class, 5 p.m.
Uh-oh.
And can you drag as an assignment? Will you remember how to drag it?
Yeah.
Okay, good. So what you're going to do, just remember when you're dragging for a downtrend, you drag from the top of the last sell move down. If it's an uptrend, you drag from the last buy move up. Just like downtrend, drag down, uptrend, drag up. It's still the same rule that applies to both of them. So assignment, ladies and gentlemen, go on your Fibonacci, look for 3 uptrend, drag Fib on the last buy moves, right? Drag all of them on daily time frame and mark out the zones. Also go on downtrend, drag on 3 sell trends and also send them to me, right? And also the zones, and also you have to check, is this zone worth buying or selling after you analyze your bets. That's the assignment, ladies and gentlemen. So thank you for coming to the end of today's class. See ya.
Coach, can't hear you. Your network is breaking.
Oh Jesus. I gave you assignment. Did you hear the assignment part?
Yes, I heard that clearly.
Okay, that's just all.
All
Mark
right.
out
Okay. 3
uptrend.
uptrends and 3 downtrends. Okay.
Yes, and send it.
All right.
All
Thank you.
right.
Thank you very much, Coach D.
Bye.
Welcome. Bye.